Okay. Hello, good evening. And it's another edition of the, you know, wrap up after the markets. Hope everyone is doing well and hope everyone had a great day trading. Of course, like the title said, it's the rate cut today, Fed. I think everyone is expecting it. And surprise, surprise, what happened? I mean, not a lot happened really, but I think the market over the past 2 days has been slow because it's building towards the rate cut, isn't it? So let's see how it played out today. I think today, not really going into the corporate news, really. Not a lot happened. But yeah, so again, as usual, you know how I start going following the trend line. You can see there we're just above there. And as we can see right here, the market was up today. I think there was no surprises compared to 2022. I think poly markets did say there will be 2.5 BPS base rate cut, basically. And yes, we did get that from the market. I think one thing is you've got to pay attention to Powell. What was this sounding like? Was it bullish? Was it bearish? But again, overall, regardless, for me personally, I mean, we know what he's going to say. I was expecting him to talk about data, but I think I actually did pay attention to him. A few things he mentioned. He talked about inflation, which is still a bit of a risk. So it's like you just take this. But again, the market looks like it's been destroyed. Yes, number one. Number two. I think there's a weakening in the labor market. We could see that. But that's for you if you're trading with fundamentals. I trade purely on technicals. Okay. So what do I see? There you go. And that's what I said. What next? Okay. I think again, this is not financial advice. Personally, I don't believe in holding or putting all my money in the markets. You got to trade you got to be very risk averse as much as possible. Risk, be aware of what's going on in the market, basically. So, yes, first and foremost, what did I see? I think I think number one, this is going to be digested. And, after hours, not a great deal, not a great shock happening in the market. And during that time, we could see a lot of things, happening. Now, let's look at the DXY. What is the DXY telling us? This is a good gauge. And look at that. It looks like it accepted that in good faith. Number one, you could see a double top right there. And there you go. So coming down. Okay. Number two, what is the IWM saying? IWM. I mean, I'm literally just giving a brief periphery of what we're looking at. IWM, look at that. That's a breakout of sorts, and it's just back to all-time high. Okay, so we're getting a blow off top right there. Um, Another one, we just looked at the cues. So it looks like the market loves this temporarily. And we've got a few, big wigs in the markets. What is Apple doing? I think Apple, which has been very strong of late, you can see that little wicks going back up there. Okay, that's number one. Nvidia as well. I think there was news yesterday about China rejecting Nvidia, say they don't care. So anyway, and you can see that's still showing some weakness right there. So, that things will take a while um, before things pick up all over again. But again, I'm not in this trade, so don't really care that much, to be honest. Another one is we looking at where is it again? Yeah, I was going to talk about Oracle, but before I talk about that, Palantir, there's something I saw a news about Palantir today as well. Probably seemed to be priced in, to be honest. But what does it say? It says Switzerland rejects Palantir software. They pose devastating risk, and after a risk assessment, they believe it's not good for them. Basically, sensitive data, and there you go. So, how valid it is? I mean, anyway, that's what we found. And Palantir, I did talk about yesterday that Palantir, I think this thing is got just about 11% to back to breaking the 200. We've got quite a few people who've bet on the 200. This has been a great options trade from about 170 level. And as you can see right there, we think on a short term, it looks like it's still very, very strong. since that reversal in November. I think it's still very much on there. Also, Tesla. Tesla is amazing, amazing, amazing. Tesla is a great one for you know, your regular trades. And again, still looks like it's on toward to breaking the 500. I mean, a lot of times what you need to pay attention to is it the SPY, or you could look at the Qs. Once the SPY leads, which I think is there you go, which I think is, the SPY, we just might see a 700 before anything at all happens. So to be honest, generally, I'm seeing quite a lot of indecision right there. If you zoom in, I'm seeing quite a lot of indecision. So I'm not really placing much trade because once you get to that blow off top at that point, panic sets in and, people get so excited. So I think it's that point where I believe we probably should start peeling in a little bit, getting some safety position cash because at the end of the day, buy when VIX is up, sell when VIX is down. It's literally what you want to do. And what is the VIX telling us right now? Because I mean, I did say after Powell, what's next? But let's look at what the VIX is telling us. VIX is, if you don't know, VIX is the fear gauge. VIX is down, markets is up. VIX is up, markets down. This is not the point where you want to be buying, but this doesn't tell for all markets. It tells for certain things. But right now, VIX is saying no fear. It looks like the market is awash with money. But look at the gold. Look at gold. What is that telling? Gold is where people tend to pack their funds. Gold is ticking back up again. Look at that. People are not scared anymore. Silver, what is silver saying? Look at that. Silver, no fear in the market. So when all this are telling you there's fire on the mountain, I think you gotta be worried. Be tread gently. That's all I'm going to say. But on the other hand, also I mean, we saw a few positions after hours today. Oracle, which was a disaster, to be honest, after the earnings. And as you can see, so right now, Oracle is, I don't know how many years low or months it's been since the AI debacle. Um, yeah, Oracle's taken back everything from this year back to July. And if you're going to look, oh, it's below 200 now. There you go. So you can see Oracle is back. Yeah, back just about July level of 2025. It's still not too bad, but yeah, it's erased the half year gains for this year. And actually, you could tell based on that, it's back to 2024 levels. That's that one. Also, Adobe, which hasn't been great for 2025 as well. I think if you look at Adobe, I think Adobe was actually okay after hours. Not a lot, not a great deal, but they did beat. It wasn't fantastic, and you can see it doesn't look like the market was impressed at all. It's not a great day for Adobe to be reporting. We had FOMC, and then of course Oracle didn't do well, so it's not in their favor. So fair play to regardless, I'll say Adobe. I'm going to cut them some slack. But again, look at that. You can see huge the double top on a weekly. And, I expect a bounce at some point, but we shall see. With Adobe, I think I've been in this one since about 3:30. Very, 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 very tiny position. I've peeled it off, and now I'm just there for the monitoring, really. Also, one more thing I've got to say: look at gold. Sorry, look at cocoa. Commodity seems to be back on, and been talking about this for a few days now. This is literally seems to be back on, and it's just gone below above the trend line. I think right now, and we are. I believe this is back. So. Right now, I'm looking at cocoa getting back into a 7,000 level, and then we'll see on a regular basis how it goes. But before we go, I saw something which is, this says this is the Finks method, the Finks way, which I just saw it from somewhere. So if you are learning to invest or trading, something you've got to understand. So let me just put it away so you can. I'll take it away and I'll repaste it. I would like to paste it on a blank screen. There you go. So if you look at these, so number one, think in decades. not days. Ignore fluctuations and media noise. You've got to ignore the noise. Number two, you must own growing assets to be financially independent, mainly broad index funds. That it's got no bias towards it really, or the bias favors you. Number three, diversification equals security. Some struggle, some do well. 50, 30, 20, stocks, bonds, property, gold, global sectors, time, horizons, short, medium, long term. A lot of people tend to struggle when it comes to diversification. Owning many stocks does not exactly equal diversification. It's a lot more detailed than that. Cost matter. Small fees compound, making an enormous difference over time. Most active managers don't compete with market averages over time. Stay humble and keep learning. The world continually changes. Be curious, adapt and evolve. Read a lot, make it a habit, and listen to those that have different views and experience. Investing makes our world's hope a reality. That's just something I'm going to part you with. So it's Fink's Way. If you all know Fink, who is it Larry Fink, I think, who is the BlackRock CEO. So yeah, if he talks, you'll listen. But anyway, we'll see how the markets will digest the Fed news today, the rates cut, because normally what I say in the group is follow the move after the move, and that's your move. So we'll see what happens tomorrow because they're digesting it today. Tomorrow might be a sell-off, or tomorrow might be for the stretch to the upside. But overall, generally, what I say is price action, price rules. That's Occam's razor. Digest and compress everything to one thing and one thing only. And that's all that matters in this. Everything I say doesn't mean anything except the price. See you tomorrow, guys. Have a good night. Bye bye.